Okay, so let's now revise the chapter of board meetings and its powers, right? If I talk about this particular chapter, it's a huge chapter, right? Covering a lot of sections and is divided into two broad parts. One is the meetings of the board, and second is the powers of the board, as the name itself suggests, right? Okay, so what do we mean by board meetings? When I talk about board meetings, it is nothing but the meeting of the directors. Why is it important to meet? Undoubtedly, because company is an artificial person and company can't run it on its own. So you need somebody to take decisions on behalf of the company. Now, prima facie, the board of directors have been entrusted with majority of the decisions of the company, except for those which are reserved for the shareholders, right? Now, how are they going to take this decision? Undoubtedly, the power to take decisions for or on behalf of the company is not with one director, it is collectively with the board. So, how do they take decisions? For them, it's important to meet. And if they don't meet regularly, companies' major decisions might be taken rashly or in a haste or not calculated or not thoughtful, right? So it is not going to be in the best interest of the company. That is why there have been made some sections which mandate the requirement of board meetings. Now, just like we have read general meetings, we also have board meetings wherein we see that what has to be done before the meeting, what has to be done during the meeting, and what has to be done after the meeting, right? So before the meeting, you need to send notice. During the meeting, you have to ensure quorum, how the resolution shall be passed, voting shall take place, and after the meeting, it's all about entering into the minutes and all, right? So that is one by one we are going to see for that. But first, section 173, from where this chapter starts, the very first thing that we see is that every company must hold 4 minimum board meetings. Minimum 4 board meetings. When you get incorporated, the first board meeting has to be held within 30 days of incorporation. Okay, within 30 days of incorporation, wherein you decide the first auditors and all of that, right? We can relate it to a lot of sections. So, first board meeting within 30 days. Thereafter, minimum 4 meetings in every year. But then that is not it. The gap between two board meetings should not be more than 120 days. Should not be more than 120 days. Like, that is the whole essence. No, the board should meet at regular intervals. There shouldn't be a lot of gap. Now, there are certain exemption benefits granted to certain types of companies. First, when we talk about section 8 company, if minimum one meeting is held in every 6 calendar months, it is completely fine. Okay. Secondly, we come to OPC, small company, dormant, and startup private company, you can say. Then minimum one meeting in half year, and gap between two meetings should be at least 90 days. Now, here the purpose is that one meeting has to be done here, one meeting has to be done here. Many companies, what they do is they are going to do 2 meetings here, and then all year round the board is not even meeting because minimum 2 meetings are only mandatory for them. So this should not happen. Minimum gap between these two meetings should be at least 90 days, just to ensure that the flow isn't done like that. Okay, so this is for them. And then we have one person company. With whom will you meet? You need to find someone else. So if you are a company with just one director, you may have up to 15 directors, and that can also further be increased. But you may also be formed with just one director, because when I talk about minimum number of directors in a company, for OPC it's 1, for private it's 2, and for public it's 3. So OPC, if you have just one director, the director isn't going to meet anyone. The director itself is a meeting, right? So for them, this particular section is not applicable, undoubtedly. Okay. Next, we move to how the meeting is going to take place. I mean, fine, you have called all the directors and all the directors are going to come and discuss. But what if some director is unable to attend? Now, in an era of technology, don't you think there should be some option of participating through electronic mode also, right? Like, if I have to attend a wedding and I'm not able to be there, people can always just at one click do a video call, and I can be a part of the ceremony, and I can look around, I can contribute my thoughts, I can talk to people concurrently, right? The same thing is put here also, as simple as that. It could be any AV means, right? Audio visual means, a video conferencing. So whenever a director wants to participate in a board meeting, he could participate in person by walking into that room physically, right? Or he may also be present in that meeting through video conferencing or AV means. Clear? Okay. Now, when I talk about this AV, there is a certain procedure which needs to be followed, and there are certain things which needs to be taken care of. Like, before I tell you this, what do you think, who is going to actually call for that meeting? Like, who is responsible for convening a board meeting? If a company has a company secretary, it is always CS. CS, along with the chairperson, convenes the whole meeting. If there is no company secretary in the company, then there would be any person who is authorized by the board along with the chairperson. He's going to do all that, right? So basically, we have the company secretary and the chairperson. Now, when you're convening the meeting, it is very important for you to ensure certain things so that the meeting can be made a success. The very first thing, there should be proper equipment. Proper equipment. Undoubtedly, if you need, like maybe you need a speaker, maybe you need certain setup. So you should have that proper equipment available pre-hand. Secondly, you have to maintain the security and integrity of the meeting. Why? Because board meeting is something which is highly confidential, unlike general meeting, which is of the shareholders and members. So in board meetings, there are bigger decisions about the companies, maybe merger, maybe something like that, which can be highly confidential unless that information is leaked out. So when they're discussing, there shouldn't be anyone else who is not a part of the meeting, who is not a director, and he is attending the meeting. That should not happen. So, one, you have to ensure that no other person has access to those proceedings. Secondly, you also have to ensure that you properly identify the person. Like maybe the video is blurred and anyone is participating. No, there should be proper identification procedures and security should be made intact. Okay, so this is done, this is done, this is done, right? Thereafter you have to record the proceedings. So whatever mode you are, maybe you are attending through a Zoom call, so Zoom recordings should be prepared, and thereafter they should also be safely kept. Maybe you put that recording in a pen drive, you name it, you label it, you keep it with the records, physical records. Maybe they are going to be kept electronically where you're maintaining, labeling it, right? So they are going to be safely kept also. And okay, this I will tell you. Sometimes there may be a differently able director who is not able to see. So he wants and he needs somebody to accompany him to do that process. So he may request and the board can allow the same. Fine. Okay, and you have to ensure that everyone is able to hear and see each other, because it is not a lecture or a one-way communication like this. It is going to be a two-way communication, right? So participants, all the board of directors should be clearly able to see and hear each other throughout the meeting. Fine? Okay. Now, when I talk about the procedure, first thing is you're sending notice to all the directors. In the notice, you clearly specify that you also have an option to participate through AV means. Now, whoever director is interested to participate through AV means will give his intimation in advance that yes, I will be willing to participate through VC or AV, right? Okay. Now, the board meeting, when the board meeting is conducted, maybe there are 5 directors in the company, 2 have participated through VC and 2 have participated through physical, and the quorum required, let's say fictitiously in this particular case, is 3 directors. So only 2 have come physically, but 2 are also participating through VC. So is quorum met? Quorum is the minimum number of directors needed to validly convene a meeting. Is quorum met? Yes. Because the directors who are participating through electronic mode are also a part of quorum. Okay. So chairman will ensure the quorum. Thereafter, there will be a roll call. Roll call is as good as taking of attendance. So director have to state that yes, my name is this, I am attending from this particular location, I have got the agenda, no other person is attending beside me, etc. Fine. So that is what roll call takes place. Fine. Okay, so after that, there will be discussions, deliberations, identification before speaking. There will be voting, and after every agenda, the chairperson will announce the summary that, okay, this was the agenda, this is what we have resolved, these are the directors who have dissented, who have not agreed, and have voted against the resolution. When the chairperson is announcing that, there would be somebody, preferably the company secretary, who is noting the minutes, right? So the draft of minutes is being generated. Once the meeting gets over, the draft is going to be circulated to during also it is going to be circulated to all the directors, and they confirm. So it is circulated within 15 days. They confirm the accuracy. If they do not reply, they have to reply within 7 days. If they reply within 7 days, great. If they do not reply, it's going to be deemed approval. And thereafter, the minutes are entered in the minutes book and signed by the chairperson. So that is how the entire procedure is. Okay. Next, we move to section 173(3). This is all about notice. So here starts the process of meeting, pre, during, and post. So pre, before the meeting. There is no particular format which has been specified. It has only been said that you need at least 7 days notice in writing. Oral notice is not going to be sufficient, and it has to be sent to every director. Every director means every director. No matter whether the director is interested, no matter whether the director is alternate, additional, he has himself said that I don't want the notice, still notice has to be sent to every director. How can it be sent? By hand delivery, by post, at the address which is provided, which is registered with the company. Electronic means maybe email, which is registered with the company. Okay, it is going to be sent, and if the company fails to give notice as it is supposed to, and you conduct the meeting, it's going to be void. Even if the failure is accidental, then also it is going to be void, apart from the fine that is already applicable. Now, sometimes it may so happen that the company, you want to discuss something very urgently and you can't wait till 7 days. I mean, today I will send the notice, I have to wait for 7 days, and then only I can conduct the board meeting. We don't have that much time. Now, if you don't have that much time, what can probably be done is send a shorter notice. Ma'am, is that allowed? Yes, it is allowed. However, in that, when you send that shorter notice, please ensure that at least one independent director is present in the board meeting, just to ensure that yes, there is transparency and no fraud taking place in the company. If at all the independent director cannot be present, then the decision is going to be circulated to all the directors, and at least one independent director will ratify it, will accept it, that yes, it's fine, I agree. It has to be in written. It has to be in writing. Okay. Then it's going to be valid. Otherwise, it's not going to be valid. Okay. Next, we move to section 174, which talks about quorum. Now, what is quorum? I already told you quorum is the minimum number of directors which are needed, because it is a collective decision and has to be collective. Let's say there are 5 directors in a company and just 2 maybe there are 15 directors in a company and just 2 directors walk in and they decide something. Do you think the decisions are going to be good enough? No. Why are there 15 directors in the company? Just because the company needs 15 directors, right? So the decisions should also be collective. And that is why quorum is the minimum needed. What is that? 1/3 of total strength or 2 directors, whichever is higher. So if I say there are 15 directors in a company, 1/3 of 15 is 5. 5 or 2, whichever is higher, is 5. So in this case, the quorum will be 5. So at least 5 directors have to come and have to be present, either physically or through AV, then only it is going to be a valid quorum. Now, whatever fraction comes, that is going to be rounded off to 1. Is that clear? Okay. Now, what if the quorum is not present, ma'am? If the quorum is not present, then it is going to be adjourned. Adjourned according to the articles. If articles don't say anything, adjourn to the same day, same time, same place next week. At the adjourned meeting also, if the quorum is not present, then the meeting is going to stand cancelled. Unlike general meetings, in the general meeting, the present members constitute quorum, but not in the board meeting. If at the adjourned meeting the quorum is not present, the meeting is cancelled. Fine. Again, you have to send a notice again, then you will call it. Okay. Fine, ma'am. Now, there are certain cases when there are many interested directors. Ma'am, what about interested directors? And what is interested director? Interested director is somebody who is interested in the contract, which is going to be taken up as an agenda in the board meeting. Like maybe I am director of this company and you want to appoint my brother as another director. Now, if I vote, I will of course vote in favor. Or maybe I will have some biasness, right? That is why I am being told not to vote. You are entering into a contract with a company of whom I hold 60% of shares. So, of course, I will be interested. And of course, I will think from that perspective also. So, I may not give an independent opinion here because I'm also inclined towards the other party. Right? So I am interested in a contract, and whenever you are interested in any contract or arrangement, you have to refrain yourself. You cannot participate in that meeting. You cannot vote in that meeting. Now, this does not apply to private companies. Private companies, if you give the proper disclosure that yes, I am interested, you can participate, you can vote. But in other companies, that is in public companies, you can't. You can't. Okay, ma'am. But sometimes there again becomes a problem. Like what? There are, let's say, total 9 directors in a company, out of which 7 are interested. Now, if there are 9 directors, 1/3 of 9 is 3. 3 or 2, whichever is higher. That is going to be the quorum. So, 3 is the quorum. There are 9 directors and 3 is the quorum, and 7 are interested. So 7 interested directors, you can't participate and vote. We are left with only 2, but the minimum quorum is 3. How can this happen? So if this is a situation, that is whenever interested directors at any time exceed or is equal to 2/3 of the total strength, then quorum shall be the number of disinterested directors or 2, whichever is higher. So here we have disinterested also 2 and 2. So if minimum 2 directors also attend, that is going to constitute the quorum. Fine. Okay. Section 8 company, you have a different quorum. Quorum is lesser of 25% of strength or 8. But it has to be minimum 2. Next, we move to section 175. Section 175, before we actually go on to section 175, we also have certain matters which are stated in secretarial standards. Like what? Is agenda necessary for all the board meetings? The answer is no. Section or Companies Act never says that agenda is mandatory and you need to send the agenda. Like when I talk about the notice of general meeting, I need to send the notice and I also need to send the explanatory statement, tell what matters, etc., etc. But when I talk about board meeting, agenda is not mandatory. What are we going to discuss in the meeting? That is not mandatory to be sent. Yes, that is not mandatory to be sent. But as a part of good secretarial practice, it should be sent and it is recommended to be sent. Okay, fine. Can board meeting be held on a national holiday? Now, this is a debatable thing. Why? Although it's very simple, but because the institute has written something like that, it becomes debatable and students are always in apprehension that, ma'am, what exactly the point is. So let me tell you very clearly. Board meeting can be held on any day. Sunday, holiday, national holiday, at any time, during business hours, beyond business hours, any place, in India, outside India, any place. Got it? That is the level of flexibility which the board meeting has got. But then, ma'am, when we look at the secretarial standards, we also get to know one thing, that an adjourned board meeting can't be held on a national holiday. National holiday means what? 26th January, 15th August, Gandhi Jayanti, etc., etc. Right? So, an adjourned board meeting can't be held on a national holiday. Having said that, the institute and its material has simply stated that a board meeting cannot be convened on a national holiday. So, that is why, for exam purpose, if such type of question comes and exam, you may take up this particular view that okay, board meeting can't be held on a national holiday, but deep down you have to understand that it is meant only for adjourned national holiday. It is only meant for adjourned board meeting. Okay, now uh, let's come to section 175. What is section 175? Whenever board has to take decisions, it can take in two ways: at board meeting or through circulation. What is at board meeting and through circulation, ma'am? See, board, you have an agenda, whether you should give loan or not, etc., etc. Or let me not take the example of loan, because we all know that section 179 says that this can be done only at a board meeting. Let me take any example. You have to enter into a contract. You have to discuss it with the directors and resolve whether you should enter into this contract or not. There are two ways to do this. One is call the board meeting, all of them will come, attend physically or virtually, and then you decide. Or else draft a resolution, send it to all the directors, and they will accord their assent or dissent. Yes, we should, no, we shouldn't. If the majority gives the assent, the resolution is deemed to be passed. That is resolution by circulation. Now, it is not allowed for all matters under Companies Act. There are many matters for which have been clearly specified that this can be taken up only at a board meeting where you need a lot of discussions, etc. So, we have section 179, which clearly tells us that these matters are going to be taken at board meeting only. We have other sections also, like section 161(4), where the casual vacancy can be filled by the board, but at board meeting only. We have something called as political contributions, etc., etc. So we have many sections which have been specified that they cannot be implemented through passing the resolution by circulation. Clear? Now, what is the procedure? What is the requirement? You draft a resolution along with the necessary papers. You send it to all the directors by hand delivery, post, or email at the address registered with the company. If you get the approval by the majority in the subsequent board meeting, you are going to note it and include it in the minutes. Right? Now, many a times it may so happen that there are directors who say that no, I want to discuss so much in this matter with my directors. So just you have sent me a resolution by mail. I just have to say yes or no. I want to convince other directors. This is such a beautiful opportunity. We must go for it. And I've seen this, I know that, right? So he has so much to discuss with other directors. So he wants an opportunity that no, please don't take this up through circulation, hold a board meeting, and I want to discuss it with other directors. Can he do so? No, because he's just an individual director. Maybe if the company has just 3 directors, he can do so. At least 1/3 of directors, if they want that the resolution should be taken at board meeting, then chairman will cancel this and call for a board meeting, and then that agenda will be taken up at board meeting only. Okay, we also have standards, secretarial standards. The annexure to it says, SS1, the annexure to it says that there are certain matters which cannot be taken for passing resolution by circulation. Now, it has all the matters which have been specified in section 179. General items like whenever you want to approve financials, you want to check what laws are applicable to the company, you want to appoint secretarial auditor, internal auditor, then all the matters of section 179 like borrow, invest, grant, making calls on shareholders, buyback, approving remuneration of MD, WTD manager, right? Making political contributions, and then you also have amalgamation, takeover, merger, issue of securities, approving budget. So there are many things which can't be taken up through circulation. Fine? Okay. Thereafter, once the meeting gets over, the resolution is passed. We also have sections 118 and 119, which talks about minutes of meeting. Now, although this is not the section which is a part of ideally CMA final syllabus, it is actually a part of inter, But because in board meeting also, once the meeting ends, the minutes have to be prepared. They have been reproduced in our syllabus, right? What are minutes? Correct, fair summary of what happened in the meeting, right? And it has to be prepared. Okay, ma'am. So when it is prepared, there are certain things which you include. Which directors attended the board meeting? Which directors have not agreed, have dissented on a particular resolution? Chairman, you could see that if there is any matter which is defamatory, irrelevant, or detrimental to the interest of the company, you may not include that. Minutes are kept properly and they serve as an evidence, and they can also be inspected, but minutes of board meeting can't be inspected. What are you saying, ma'am? Yes. Because in board meeting, you have discussed something very confidential. You have prepared a summary of it, and all the members are coming and evaluating it and inspecting it, and then the information is all leaked. No. So, minutes of general meeting can be inspected by the members, but minutes of board meeting, they can't be inspected. Okay? So, keep this in mind. Now, section 177, audit committee. Section 176, not a part of syllabus, but still it's clearly written. And I have told you this. Now, I'm not going to tell again in the revision class. Audit committee, section 177. What is audit committee? Committee is what? Nothing but a group of directors, right? What are they going to do? They are going to look at certain functions with respect to audit, with respect to examination, with respect to checking of internal controls, with respect to ensuring that everything is in order, with respect to examining the financial statements, recommending who should be appointed as the auditor, whether it's secretarial auditor, internal auditor, stat auditor, whatever it is, right? Dealing with the auditors, checking their report, etc., etc. Ma'am, all these things can be done by the board. Yes, prima facie they are done by the board only. The board, you decide, okay, this auditor should be appointed, so you go ahead and talk to that auditor, everything falls into place, you recommend that auditor and appoint it. The members pass an resolution and they appoint it. That is what happens. But when the company grows, you need to delegate things. Everything you cannot do. You have so much to do. You have so many things to discuss. So instead, what you do, you form different committees. Now, they are nothing but directors who have maybe expert knowledge about finances and audit and all of that. So they are better ones. They understand it better. They can do that feasibility study. They can analyze. They can look. They can do everything. And they can always come and recommend and report to the board because they are working under the board only. Right? So there are only big companies which are required to constitute audit committee. What are those big companies? All the listed public companies and the same companies which are required to appoint independent director, like paid up capital of 10 crores or more, turnover of 100 crores or more, or loans more than 50 crore. So you will constitute an audit committee which will have at least 3 directors, out of which majority has to be independent. So if there are 4 directors in an audit committee, 3 are going to be independent. 3 are going to be independent. Fine. Now what does this audit committee do? The functions or the duties, right? This is important. This is not important. What are the functions of audit committee? They are going to recommend. Ultimate decision is of the board only. The board may also disagree with the recommendation of audit committee. So the board or audit committee are not deciding that this is going to be the auditor. No, you're only recommending. Recommend what? The appointment, the remuneration of auditors. Fine. Review the auditor's performance, examine the financial statements before it is handed over to the, before it is signed or adopted by the board. And also, once the audit report is prepared, that also is going to be reviewed by you first, then it is going to be presented to the board, right? Okay, you scrutinize certain loans, you also approve the related party transactions, then you value undertakings whenever necessary, then you evaluate the internal financial controls, you monitor the use of funds which have been raised through the public, that are they put to good use or not, correct use or not. Okay. Now, when I have said you approve related party transactions, what are they? You have section 184, you have section 188, you have section 177. These are the three sections where you talk about this, where you relate to this. What are they? Section 188 tells us what are related party transactions, not exactly. Then you have section 2 clause 76, which tells us what is a related party. What is a related party, which clearly says that, okay, we have a director, we have the relative of director, we have KMP, we have the relative of KMP, holding, subsidiary, associate, etc., etc. They're all related party to the company. Now, company, when you enter into 7 specified transactions under section 188, you need approval. What approval? Approval of audit committee, or you can say board, and if it exceeds the limit, you also need the approval from the members. Okay? Okay? That is the approval that you need for related party transactions. That means maybe the company is selling its goods to the directors. Now there are arm's length price, etc., etc. That we get to section 188, then we will understand and realize. Then in that case, section 188(1) is not applicable at all. Okay, so if you're selling your goods to your director, then you can't sell it without any approval. You need audit committee's approval. Okay, if it is not covered in section 188, your audit committee only gives the recommendation. Fine, otherwise you need approval. Okay, now if the amount is 1 crore or lesser, you may not take approval. If you do not take approval, then it can be ratified within 3 months, and it's going to be otherwise it's going to be voidable at the option of audit committee. Audit committee may accept it or may rescind it. Fine. Now, there is something more that I want to tell you. But before that, okay. Board's report, you have to disclose this, and if you contravene, this is going to be the penalty. Now, we also have something called as omnibus approval for related party transactions. What is omnibus approval? Omnibus approval is like a one-time approval for a series of transactions. So, there is a company, and this is director's brother. Director's brother has a building which he has given on lease to the company. So every month company has to pay a lease rental of 2 lakhs or 5 lakhs, whatever it is, to this director's relative. So it is a related party transaction and it needs approval of audit committee. Now every month they are coming. Every month they are coming and every month they are seeking the approval. It is wasting the time of the party, wasting the time of the director concerned, wasting the time of the audit committee, because it's a recurring thing which is happening. So for such type of transactions, what can happen is you take a one-time approval for all the transactions for maximum 1 year. After 1 year, again, you have to take that approval. And it's not allowed for selling undertaking of the company. You can't take that omnibus approval for selling undertaking. Okay. So, based on the repetitiveness and justification, how justified it is to give omnibus approval and how repetitive nature it is, audit committee can give omnibus approval for related party transaction and may impose the conditions on the same. Now, before that, they will always specify the criteria. If you fit in that criteria, you can go and ask for omnibus approval. What is the criteria? That maximum value during financial year, maximum value per transaction, what disclosure has to be made, what transactions are not permitted, how frequently it's going to be reviewed, intervals and all that, right? So that criteria will be specified. Based on that criteria, you can approach and you can get that approval. And what is the disclosure that needs to be made? The name of related party, nature and maximum amount of transaction, base price, other info, etc. Okay, so I hope this is clear. Fine. Now section 177 is not yet over. We also have something called as vigil mechanism. Now, the companies which are required to constitute audit committee are not the companies which are also required to have vigil mechanism. It is entirely different. Vigil mechanism is for preventing the ones who raise their voices. It is giving them safeguards against victimization. If I know somebody, maybe my manager is indulged in a fraud, I will be always afraid to report. Why? Because I cannot report. I don't have any good reporting channel. If I have to take any complaint, I have to go to my manager only. So if I'm going to my manager and telling him, see, you are involved in a fraud, he's going to immediately demote me, fire me, or plot against me and throw me out. Right? So I am scared. So I will be silent. And that is why such type of genuine concerns will not be reported in a company, and company can't function better. Now, in the listed companies, in companies which have public deposits, because a lot of public money is involved over here, and a company which has borrowed money from banks or PFI in excess of 50 crores. Again, a lot of public money is only there, because in banks also you have public money only, right? So in such type of companies, it is mandatory to establish a vigil mechanism. Vigil mechanism is nothing but a system, but a setup. Setup where if I am an employee and I want to report a genuine concern, I should have a direct access to the chairperson of audit committee. I should have a channel through which I can report anonymous complaints or direct complaints, whatever it is, and action should be taken. If action is not taken, I should not have to go to my manager, but I can directly walk into that particular person. I should have that access, right? Or whoever is overseeing that vigil mechanism, because if the company has audit committee, then audit committee is going to look after that vigil mechanism. If the company does not have audit committee but is required to form a vigil mechanism, then any director who is nominated is going to look at the vigil mechanism. Okay, fine, clear? Next, we come to section 178, which talks about NRC and SRC. Again, two committees. NRC, which companies are required to form NRC? Same. Listed public company, and the companies which are required to appoint independent director, the companies which are required to constitute audit committee, the same companies also required to constitute NRC. So if you fulfill that criteria, there are three things that comes applicable to you straight away. Okay. Fine. This is clear? Okay. Now NRC, what are you going to do? And what is going to be your composition? You have to have minimum 3 directors, and they are going to be non-executive only. There is no such requirement in audit committee. Here 3 or more non-executive directors, and half have to be independent directors. So here we have lesser serious requirement in comparison to audit committee when it comes to independent directors. So if we talk that, okay, let's have 4 directors in NRC, at least 2 have to be independent. But in audit committee, if we have 4 directors in audit committee, then at least 3 have to be independent, because there it was written majority, here it's written half. Okay. Whoever is the chairperson of the company, despite being an executive director, he can be a part of NRC, but he can't chair the NRC. What NRC does? NRC, Nomination and Remuneration Committee. So you have to look at who should be appointed and what should he be paid. Again, you will be recommending to the board, because you're still operating under the board. So you identify the persons who can become directors or who can be a part of senior management. You evaluate how the board is functioning, how the committees are functioning, how the directors are functioning, right? You also tell who should be removed, who should be appointed. You formulate that entire criteria of that what should we see in an independent director, right? The policy, the remuneration policy. So you help in that formulation. Okay, so you recommend that. All that has to be taken care of. Next is Stakeholders Relationship Committee. Stakeholders Relationship Committee is entirely different. The more number of people you have, the more number of complaints will be generated. So you have to understand that if there is a teacher who caters to only 5-10 students, right? Only 5-10 students, then you don't need a separate team or anything like that. Maybe somebody's system has crashed, maybe the software is not working, so you connect, and only one person will be able to help all these 5, 7, 8 whatever students are there. But if this comes to 800, if this comes to 8,000, then the problem strikes. One person can't serve. Now you need an entire dedicated team to help them on these technical grounds, to maybe help them on certain other grounds, right? So as it grows, you need more people. So if the company has more than, if the company has more than 1,000 stakeholders, means shareholders, debenture holders, deposit holders, bond holders, everyone collectively, at any time during a financial year, not just at year end, but at any time during financial year, then you also need to constitute SRC, because they might have n number of complaints. I have not got my dividend, I have not got my share certificate, my transfer is not taking place, etc., etc. To all these problems that they have, that has to be resolved. So to resolve these grievances of the security holders, you need a SRC. Okay. SRC. Now, what is going to be the composition of SRC? There is no composition which has been specified. It's only stated that the chairperson will be non-executive director and such other members as needed. Okay. Fine. Next, we move to section 179. Section 179. Now, this section tells us what board can do, what is the power of the board, right? So, prima facie, board can do everything which company can do. Like, we have a memorandum of association, and in the object clause, it is written that company can enter into construction contracts. So, board, you can enter into construction contracts. Under Companies Act, it is written that a company may alter its articles. So, board, you can alter your articles. Correct? Correct. So basically, within, like, board can exercise the powers, but obviously it has to keep in mind, or these powers are subject to Companies Act, memorandum, articles, or maybe any regulation which is set on general meeting, right? Yes, ma'am, correct. So that is what exactly a company can also do, basically. But then, as you said, alter its articles. Just by passing board resolution, the articles can't be altered. For altering the articles, basically you need to pass special resolution. And when I say special resolution, that means it is the power which the members have. Correct. So basically, board, you can do everything which a company can do subject to these, other than the powers which have been reserved for the members to be exercised in general meeting only. Apart from this, undoubtedly, you can do everything. And when I say you can do everything, it means that you can do it at a board meeting or through resolution, as we have read in section 175. However, section 179(3) tells us that there are certain powers which are going to be exercised only and only at board meeting. What are those powers? What are those matters? If you want to make a call on shareholders, right, you want to get the call money from the shareholders, that is something which is not going to be done. That is not something which is going to be resolved through circulation. Okay, so calls on shares, buyback, issue of securities, borrow, invest, grant, that is borrow money, invest funds, grant loan, security, guarantee, approve the financial statements, diversification, amalgamation, takeover, and then we have other matters as prescribed, in which we get 3 more points. That is to make political contributions, to appoint or remove KMP, and to appoint the auditors, that is secretarial and internal auditor. So if you want to do any of these, you have to call a board meeting, because these are the matters which require more discussions. Okay. Now, out of these are the three powers, that is borrowing of money, investment of funds, and giving of loans, can be delegated. Delegated to whom? Maybe committee of directors, maybe MD, maybe manager, maybe any other principal officer of the company or of the branch, whatever the case be, right? So these are the three powers which can be delegated to them also. Okay, I hope that's clear. Fine. Now we come to section 180. Now 180, 179 has given the power, and 180 comes just running behind it and says, stop. Your power is restricted. You have the power to borrow money, but you can borrow only up to this amount. Beyond this, if you want to borrow, you need to go to the members and take their permission. Fine. So there are four things which have been specified which require special resolution. Okay, what are those four things? First is selling or disposing undertaking of the company. Either whole undertaking or substantially the whole undertaking. Now, what do we call as undertaking? Maybe I've just started a venture and I have spent 1 lakh rupees on this particular venture. It has not generated any revenue and now I want to sell it off. Do I need to pass special resolution for this? The answer is no. That's not even an undertaking. So what is an undertaking? Undertaking means either you have invested more than 20% of your net worth, or that undertaking is generating 20% or more of the income. So if it satisfies any of the two criteria, then that is going to be called as investment. That is going to be called as undertaking. Now, if I want to sell this entire undertaking, then I need SR. If I want to sell substantially this undertaking, that means 20% or more of this undertaking, then also I need SR. Clear? So that's the first point. Moving to the second point. If I want to invest, if the company, I means the company right now, okay. So if the company wants to invest the compensation that they have received on merger, now basically I've explained you this in the class. Whatever money we are receiving on amalgamation that belongs to the shareholders, it cannot be invested anywhere without their approval, right? So it has to be, it can be invested in like the trust securities like post office, bank and all that. Otherwise, no. Third, borrowing. You can borrow. Undoubtedly, under section 179, you also have the power to borrow. So this borrowing you can exercise only at board meeting. Fine. But then, if this borrowing, the amount that you've already borrowed plus the proposed borrowing. Now, when I say this borrowing, then it is not including the temporary loans. Temporary loans means your loans which are repayable on demand or within 6 months, that is the short-term loans, or maybe like the cash credit, CC, discounting of bills, etc. All that is not included. All this is not a part of the loans. So whatever amount you have already borrowed plus what you're proposing to borrow, if that exceeds paid up capital plus securities premium plus free reserves, then you need SR. If it is not exceeding or within that limit, then BR at BM is going to be sufficient. The last one. If you give time to your director, if you extend the repayment of loan time to your director or remit the loan given to the director, then you have to pass SR. So maybe you have given loan to a director and that director is asking for more extension of time, and we can't give loan to a director as it is prohibited under section 185, correct? But under certain schemes and all that you can give, right? That falls as an exception also. So if they want the extension time, or if there is any debt which is due from a director, any debt which is due from a director, then with respect to that, if they want any extension, maybe it's in pursuance of any related party contract, etc., whatever it is, then that SR will be needed. Okay. Now, when you pass SR for this, you will also specify that you are giving the power to the board to borrow up to 5 lakhs. So the amount has to be clearly specified. If the amount is not specified, that SR is going to be void. Okay? Clear? Next, we move to section 182, political contributions. Now, company, you are allowed to make political contributions, but if you're a government company, you're not allowed. And if you're a company which is in existence for less than 3 years, then also you're not allowed. Otherwise, you're allowed. You have to pass a resolution at board meeting only. You can give the political contribution through check, draft, ECS, or other specified instrument, right? You can give it directly or indirectly, but you have to disclose it in P&L account. And two things are also going to be deemed as political contribution. One is when you give any donation to somebody who's not a political party, but that somebody is doing something which is affecting the public support for a political party. So he's doing something in favor of a political party. So that is an indirect contribution only, and it's going to be deemed as political contribution only. Secondly, when you are maybe giving an advertisement, etc., right? So that is also going to be political contribution only. Next, we come to section 184. That is disclosure of interest by a director. Now, I already told you this although, but I will just repeat myself. I am a director of this company, or I'm going to be a director of this company. I may also be a director of this company. I may hold shares of this company. I may be a partner in this firm. So, all the other business connections that I have, I'm not talking about the relatives, all the business connections that I have to disclose it. I have to tell the company that these are the business connections that I have. When will I tell that? In the first meeting of the board in which I'm participating. In the first board meeting of every year, whenever there is a change. So I will disclose my interest in any company, any body corporate, any firm, any association of individuals, etc. My shareholding, my partnership, whatever it is. So I am going to disclose this. Fine. In MBP 1. I hope that's clear. Now there is something called as specific disclosure also. Specific disclosure means the company you are entering into a contract with another company, and this company I have the shares or something like that, right? So I'm interested in this contract. I have to give another disclosure. And I will not participate in the board meeting in which this contract is being discussed, and I will not vote on this matter. Got it? Because I become interested. If I do not disclose, if I participate, if I vote, it's going to be voidable at the option of the company. Because the company has every right to know that I was interested in this particular contract. Fine. Okay. Now, nothing applies where the shareholding is not more than 2%. Okay. Now, one thing. Whenever I'm talking about any contract or arrangement, see, company, you enter into a contract or arrangement with this, and you are the director of the company, and you hold more than 2% of paid up capital, or your promoter, manager, or owner, I should say, promoter. Yeah, you can say you are a promoter, manager, CEO of that body corporate, or maybe the company is entering into a contract with a firm and the director is a partner, owner, or member. So, in this situation, you have to disclose and you will not participate. Clear? Next, we come to section 185, loan to directors. Loan to directors. Prima facie, what is the situation? That company, you are prohibited. You cannot directly or indirectly give loan, guarantee, or security. Now, when we are starting this particular section, we will also read section 186, where we will be talking about LGSI. What is LGSI? We have loan, we have guarantee, we have security, and we have investment, right? Now, investment we read only in section 186, but loan, guarantee, and security to the directors or some related entities is what we read in section 185, and to others we read in section 186, right? So, company, if you are giving loan, guarantee, or security to the director or the director of holding company, or the relative of such director, or partner of such director, or a firm in which such director or relative is a partner, then that's complete prohibition. That's complete prohibition. But you are permitted to give loan, guarantee, or security to any private company in which your director is a director or member. Okay, any body corporate whose board acts according to the director of the company, any body corporate in which the director holds more than or equal to 25% of voting power. You can do this. You can give LGS to these if SR is passed. If SR is passed, and whatever money you are advancing is not going to be invested, or likewise it is going to be utilized for the principal business activities only. How do you pass SR? The notice is sent along with the explanatory statement. So in the explanatory statement, there will be clearly the details are going to be mentioned, and thereafter SR is passed. Fine. Now company, if you are a government company and undoubtedly you get the approvals from ministry, CGSG, then it's not applicable to you. That means you can go ahead and give the loan to your directors if you want to. Also, if you're a private company and no body corporate has invested in you, your borrowings are lesser than lower of 2 times of paid up capital or 50 crores, you have not done any default in repayment of borrowings, then again, this is not applicable to you. You are exempted from this particular section, section 185. Fine. So through MCA circular, we have a non-applicability. Now, there is one more thing in general, that is this. Company, if you want to give loan to your directors, you can. How can you give that? If you are giving loan to your MD or WTD, not to your independent directors or part-time directors, MD or WTD, because they are like employees only. So as a part of same conditions of service as you extend to the other employees, like if you're working in my company, you are eligible to take like this much loan in this conditions. I'm extending it to all the employees. So am I extending it to you also? So that's allowed. Secondly, if there is a scheme which has been approved by SR, so through that scheme, if anyone is taking that loan, that is allowed. Thirdly, if I'm a banking company and in the ordinary course of business, I'm only lending loans. So you are also one of the persons and you take that loan. However, the rate of interest, although a bank can give their own employees a loan at a reduced rate of interest, still the rate of interest should be more than or equal to the government security yield. At least it cannot be lesser than that. Fine. If the loan is made by holding company to its wholly owned subsidiary for business, fine. Or if you are giving a guarantee or security by the holding to its subsidiary. Guarantee or security by holding to subsidiary, loan by holding to wholly owned subsidiary. Fine, that is also allowed. So non-applicability on these 4 things, this particular section is not applicable. Moving to the next section, section 186, LGSI. Before that, we have a small thing which we have already although discussed when we were discussing about the definition of subsidiary company, that you can't have more than 2 layers of subsidiaries. Now this here, they talk specifically about the investment company. So company, you can make investment, but in maximum 2 layers of investment companies. This is not applicable to banking company, insurance company, wholly owned subsidiary is not counted, NBFC with net worth of more than 500 crore, government company, not applicable. Fine. Okay. Now we come to LGSI. So loan to any person or body corporate, undoubtedly other than the directors, because directors we have already read in section 185 and that's already covered, right? Okay. Then guarantee to any person, security to any person with respect to the loan, of course, investment in the body corporate. Whatever you are doing will require UBR. UBR means what? UBR means if there are 5 directors in the company and 4 directors attend the meeting, all 4 have to give consent. It cannot so happen that, okay, one is not voting, maybe two have voted in favor, etc., etc. No, all four. So consent of all the directors present in the meeting is called as UBR, unanimous board resolution. That's needed. Okay, that's needed. Now this LGSI has a limit. LGSI has a limit. If you make the LGSI proposed plus existing and it does not exceed the limit, then fine. UBR is sufficient. You don't need any members' approval. But if it exceeds the limit, then you also need SR. What is the limit? Higher of 60% of paid up capital plus free reserves plus securities premium, or 100% of free reserves plus securities premium. So whatever is higher, that is the limit. If it is exceeding the limit, then you also need SR. Otherwise, UBR is sufficient. Okay. Now, when you are actually passing a unanimous board resolution, then undoubtedly you have to give notice to the members, and they are going to come. Whoever comes, everyone has to vote. If the LGSI limit is exceeding, then again UBR has to be passed. You cannot do away with the UBR. After UBR, you also need members' approval through SR. Now, there is one more thing which we called as PFI approval. PFI approval means the company has taken loan from any bank or PFI, right? You need their approval also if the limit exceeds. If the limit does not exceed, then you don't need their approval unless you have done a default in repayment. Okay. So if the limit does not exceed, SR not required, and no default in payment, approval of PFI also not required. Otherwise, you need PFI's approval. Clear? Whatever loan you will be giving, you have to ensure that the rate of interest on loan, maybe you are giving a loan to your another other company. Okay. The prevailing yield cannot be lesser than the prevailing yield of government security. It has to be either equal or more than that. Fine. You will disclose all the details in the financial statements, and there are certain exceptions which we have already discussed. There is going to be a register which is going to be maintained and kept at the registered office, which is also going to be open for inspection. Okay. So I hope this is clear. Next, we move to section 187, which is a very small section, I would say, which talks about investment of companies in its own name. So company, if you have any security, if you have any property, if you have any asset, that is going to be in your own name. It cannot be in any other person's name. Like if I'm staying in a house, it can be in the name of my father also, right? But company, if you own an asset, it has to be in your name only. But this company is my wholly owned subsidiary. That means all the shares are held by me. Yes, then only it will be wholly owned subsidiary. But can all the shares be in my name? All the shares are held by me, that's fine. But can all the shares be in my name? If all the shares are in my name, that means this company has just one shareholder. And if it's a public company, by Companies Act law, there have to be minimum 7 members. So this would be contravention of law. But you can make your wholly owned subsidiary. That means you can own all the shares of a company. Yes? Yes, ma'am. So what do? Now the company, you will hold all the shares but through the nominee. So you will appoint 6 other people, give them 1 share each, just for the name's sake. These are your shares. You know it. The company knows it. Everyone knows it. You are getting all the benefits, everything. You have an agreement. Just they're holding the shares in their name. So they're nominees. That is allowed. So if it is necessary to do so, that is allowed. There are 4 more exceptions, I would say. If I am giving my share certificates to the bank that, okay, on behalf of me, you collect the dividend, you collect the interest, etc., it's allowed. If I transfer the shares to SBI or maybe any scheduled bank, why have I done that? Because they are going to facilitate the transfer, right? Many a times I want to sell my investments and I don't have that platform, so I'm giving it to the bank, I'm transferring it to their name just to smooth the process. And if it's done within 6 months, great. If it's not done within 6 months, I will retransfer it. So that is also allowed. If I am giving it as a security to the bank because I've taken loan from the bank, it is allowed. If my deposits, my investments are in the name of the depository, undoubtedly if the shares are in demat form, that is how it will be. So that is again allowed. Okay, and here we move to the last section of this particular chapter, that is in your syllabus, I would say, because there are many other sections which I have very quickly told you, but that we're not going to revise here. Okay, now section 188, that is related party transactions. First of all, what is related party? What is related party? Director, their relative; KMP, their relative; firm in which director or manager is relative. Then you have a private company in which the director or manager is a relative or is a director, right? Relative is a member or a director. Then you have a public company in which the director or manager is the director and holds more than 2% of paid up share capital. Then any body corporate who is acting according to you, or you are acting according to that person. Then you holding, subsidiary of holding, investing, right, and other as prescribed. That is going to be called as a related party. Fine. Now, if you are doing any transaction with a related party other than at arm's length price, because if you're doing it at arm's length price and in the ordinary course of business, like I am the director of an airlines company and I'm booking a normal flight just like any other customer would, then that's not a related party transaction. To that transaction, section 188 is not applicable. Fine. So other than at arm's length price, if the company is entering into any contract or arrangement with a related party, then you need a resolution at board meeting. If it doesn't exceed limit, no OR is needed. If it exceeds the limit, then you also need ordinary resolution at general meeting. Fine. So board meeting, the resolution is mandatory. Ma'am, is it for all the transactions? No. There are 7 specified transactions in section 188 to which you need this. Otherwise, if the company is entering into a related party transaction other than these 7 specified transactions, no approval is needed. Fine. What are those 7 specified transactions? Sale or purchase of goods or materials, buying or selling of disposing of property, leasing of any property, availing or rendering of services, then buying or selling through agent. That is also one point. Then you have appointment at OPP, then underwriting of securities. Now they all have been specified a limit. Sale or purchase of goods or material, 10% of turnover. So if it is 10% or more, then you need OR. If it is less than 10%, you don't need OR. All you need is a board resolution. Fine. Likewise, we have 10% of net worth, 10% of turnover, 10% of turnover if it exceeds 2.5 lakhs and if it exceeds 1% of net worth. So, approval is needed in all these cases. Approval of members is needed in all these cases. Otherwise, board resolution is going to be sufficient. Fine. So basically, if you are entering into a related party transaction, company, you are entering into a related party transaction, and that is one of the transactions specified in section 7, in section 188, then you will see if it exceeds limit or if it does not exceed limit. If it is not exceeding limit, you will call the board meeting, because the resolution has to be passed at board meeting only. How do you call the board meeting? By sending notice. Along with this notice, the agenda will be sent, which will clearly specify what is the related party, the nature of relationship, what is the terms of contract, right, the price, any advance received or advance paid, how did you end up to the commercials, all factors have been considered or not, etc., etc. The directors will come. Interested directors will not participate. In private company, they can participate. Fine. So interested directors will not participate. There will be voting. There will be resolution passed. Now, that is it. But if you exceed the limit, then thereafter you will also send the notice of general meeting along with explanatory statement, which will again specify the name of related party, the director who is involved, the nature of relationship, the terms of contract, the pricing, other information, etc. Now the members will come. There will be voting and all of that, and all you need is an ordinary resolution. All you need is an ordinary resolution. However, again, related party will not vote. If you are a member, you may be a member also. You may be a member also. So again, you will not vote. Related party member will not vote. Again, in private company, he may vote. Fine. And that is how the resolution will be passed. The resolution will be passed. If at all you don't take the necessary approvals you had to, then it is going to be voidable at the option of the board or the members, and it can be ratified within 3 months. Otherwise, it's going to be voidable at the option of the board or shareholders. If there is like maybe there was a director involved and he did not get the necessary approvals, and the transaction has taken place, the contract has been entered into, whatever loss the company is suffering, the director, that concerned director will indemnify. And then you also have the penalty. You also have the exemptions, which I have told you, like it's not applicable to the case of compromise, arrangement, amalgamation, etc. Right? So that's it for the revision of this particular chapter. Thank you.